What if I told you that keeping your money safe in the bank is actually one of the biggest financial mistakes that you can make? As an investment manager, I've spoken to thousands of Muslims over the past decade, and I've seen the same mistake repeated over and over again. People keeping tens of thousands, sometimes hundreds of thousands, sometimes millions, sometimes even hundreds of millions in their bank account, thinking they're being responsible. But actually the complete opposite is true. In the UK, there are 6.5 million current accounts that hold over £10,000, which are earning absolutely nothing. In the US, it's even worse. There's a whopping $3.9 trillion sitting in non-interest bearing deposits. All of these people are losing money every single year. And the banks are laughing all the way to, well, the bank. In this video, I'm going to tell you exactly how much you should actually keep in a bank, and then how to use the rest in a halal way, in a way that it works for you and starts putting money in your pocket instead of the rich bankers in Canary Wharf and Wall Street. The biggest problem with cash is that it's the laziest worker you'll ever hire. Think about what it actually takes to earn £10,000. If you're on an average UK salary after tax, that's roughly 3 to 4 months of your life. 3 to 4 months of early morning commutes, difficult managers, work deadlines. And if you're a business owner, that's £10,000 worth of sales, pitching clients, delivering work, and then chasing on the invoices. And then after all of that, you put it in a bank account. You check that bank account after a year, and your money has just sat there doing absolutely nothing. The digital equivalent of just sitting on the sofa and playing PlayStation all day. And the worst thing is, it's now also worth less than it was a year ago. It's still the same £10,000, but because of inflation, you're only able to buy less with it. This is what everyone needs to appreciate. Money doesn't stand still. It actually slowly goes backwards. Now imagine if instead of putting that money in a bank account, you decided to put it somewhere else where it continued working for you. That's what investing your money is. If you put that same £10,000 to work in something that generates, say, 7.5% returns, and I'll talk about how to do that in a safe and halal way in a moment, after 1 year, it becomes £10,750. Then £11,550. And each year from then on, you're earning more and more money on your money that you no longer have to work for. Over 10 years, your lazy stay in the bank cash stays at exactly £10,000. But the money that went to work for you grew to over £20,000. That's an extra £10,000 you never had to sacrifice a weekend to earn. So how much cash should you keep? Wait, hang on a minute, Ibrahim. I hear all of that, but I need money for emergencies and day-to-day spending, which is spot on. But the problem is that most people overestimate how much they need for emergencies. The point of an emergency fund is simple. In a worst case scenario, if you lose your sources of income, do you have enough money to keep paying for your essential living costs until you can get back on your feet? Shelter, food, the basics. So strip everything back to just those core expenses. Mortgage or rent, groceries, essential bills, etc. Take all of that and multiply it by 3. That's your basic emergency fund. If you want more protection, multiply it by 6. If you're self-employed or have unstable income or have a family that's depending on you, go crazy, go for 12 months. That's the absolute limits of your emergency fund and the size that it needs to be. It doesn't need to be more than that. I've spoken to far too many people sat on 50,000, 70,000, even 100,000 in their current account, all of it labeled as an emergency fund. Not because they've done the maths, but purely out of fear. And that fear is costing them and causing their money to lose value every single day. And the bank that they're sat with is making them money every single day. So yes, build your emergency fund, but make sure it's sitting in an easy access halal savings account, something that you can get to quickly with no penalty, and at least it's earning some money. Know your number and be honest with yourself about whether what you're holding is genuine protection or just comfort. Now, some of you might be thinking, okay, Ibrahim, I'll just put my emergency fund in a decent savings account and that solves the problem. But it doesn't, because even if you find a savings account paying 3 or 4%, once you account for inflation and then zakat on top of that, your money is still going backwards. Umar bin Khattab was famously reported to have said, trade with the property of orphans and then it will not be eaten away by zakat. Think about what he's actually saying here. He's not saying don't pay zakat. He is saying zakat is an obligation and a blessing. But he's saying don't let your wealth sit still, because zakat on a stagnant pot will quietly eat away at it year after year, eventually leading to hardship for that person that you were supposed to be looking after that money for. Whereas Instead, if you invested your money and your money grows, you will actually end up paying more zakat in the long run and your money will be protected, which is better for you and for the poor. So the question isn't just where do I keep my emergency fund? The question is, what do I do with everything else? This is where most people freeze. They know they should be doing something, they just don't know what. So let me break it down simply. Halal investing means putting your money to work in assets that don't involve interest, gambling, or haram industries like alcohol or weapons. That's it. There are 3 beginner-friendly asset classes worth knowing about. The first is stocks and shares. When you buy a stock, you're buying a small piece of ownership in a real business. Think Amazon, Apple, Microsoft, Tesla. Every time you buy a share, you become a part owner of that company. When the business does well, your share goes up in value. And when it pays out some profits, you get a cut of that as well. Now, trying to pick which individual companies will do well is incredibly difficult. Even professional fund managers get it wrong most of the time. So the best way to start is through funds. Instead of picking one company, a fund lets you buy a small slice of hundreds of companies at once. This spreads the risk so that even if a few don't do well, you're protected. For Muslims, there are funds that are specifically screened to be Sharia compliant, such as SPUS, which is a halal version of the S&P 500, the top 500 companies in America, or HSBC's Islamic Global Equity Index. Historically, global markets have returned around 7 to 10% a year over the long term. Not every year, but over a decade. That's the range you're looking at. The second area that you can look at is property. As Muslims, we already have a love affair with property, and that one's nothing new. But what most people don't realize is that you can actually invest in property now without having to buy an entire house. There are platforms that let you get started from as little as £100, such as Yielders or Bayuti. And if you have a little bit more, there's also Wahid, who allows you to invest from £5,000. We also have our own property fund, but we've structured it differently. Instead of purchasing single homes, we've created a fund that has exposure to thousands of homes through our investment in halal home finance providers such as Offer and StrideUp. And the beauty of this is that you're helping Muslims get onto the property ladder whilst also earning around 7% in returns. The third investment category is gold and silver, the oldest store of value in the world. You can buy it physically or in coins and bars, or you can buy funds that trade on the stock market that hold it on your behalf. The reason why people do this is twofold. You don't have to worry about physically storing the gold and silver, which is obviously a big security risk. And secondly, it means you can benefit from tax efficiencies by holding it in a tax-free account such as an IRA or an ISA, which we've done a separate video on if you're interested. And that, folks, is just the tip of the iceberg. There are a whole range of other halal investing options available to you beyond these 3. And if you want a clear and simple breakdown of all of them, we've put them together in a free halal investing checklist that has already helped tens of thousands of Muslims get started. Link is in the description below. Check it out. We've also got a full video of where we break down exactly how to build a halal investment portfolio from scratch. That's linked on the screen now. Look, our mission at IFG is simple. We want to help Muslims level up financially and close the wealth gap between our community and everyone else. And one of the most powerful ways to do that is to stop leaving our money in accounts where it's doing nothing. Or worse, funding institutions and industries we're not comfortable with and starting to put it to work for us instead. Your money should be working for you, not for the banks in Canary Wharf and Wall Street. If this video helped you, please do leave a comment below and let us know. If you know a Muslim who needs to hear this, send it to them. That's how we grow together.